The information shared during this conference call is provided for educational purposes only and should not be considered an offer of services by Ellevest. This call is being recorded. It is now my pleasure to welcome today's hosts, Ellevest Senior Portfolio Manager Alondra Garcia and Vice President of Investments Ankur Patel.
Hi, Alondra.
Hey Ankur, how are you?
Great. How are you doing?
I'm doing well. Thank you everyone for being here with us for the next half hour. I am Alondra Garcia, Senior Portfolio Manager at Ellevest, and I have Ankur Patel with me, Vice President of Investments. So we're excited for this conversation. I think we can just jump right in.
Let's do it.
Perfect. Okay, so there's a lot to cover because there's a lot going on right now. But before we get to our main topics around the SpaceX IPO and prediction markets, what are your thoughts in general about markets? We've seen great performance in May and April, but then it's been selling off. The market has been selling off over the last week. We've also gotten high inflation readings, an escalation in the conflict with Iran, and AI stocks just seem to be on quite the ride, up or down. And on the flip side, we have the latest earnings season, which was spectacularly strong. The labor market has improved, which ironically sent stocks down as the probability of a rate hike this year. So, what do you make of this market?
Oh, so much to digest. And as we're going through this, if you're dialed in right now, feel free to throw any questions at us in the Q&A chat box below. We'll try to address them as we go along. But you're right, there's just so many moving parts to this market. We've seen the market go to all-time highs this year. We've seen over the last couple of weeks a sell-off. There's been positive news coming out around earnings, like you said. We saw a really strong jobs number come out, reaffirming that the job market is not as weak as we all expected or thought it was after the last couple of months. But there's been risks, and some of those risks have been more crystallized lately. I'd say inflation being the main culprit for the last sort of week or so has been in the headlines a lot. You've seen an inflation number come in at 4%, which we haven't seen in quite some time now. Especially after all the progress on inflation that was made post-pandemic, and that's caused a lot of concern in markets in terms of just the prospect for that rate hike that you mentioned going into the back half of this year. That was, we've gone from this place of hopefully this war is over sooner rather than later to, it dragging on later than everyone expected. And every day it goes on, the worse the prospects for inflation get, and the market's actually pricing that in. So, from my perspective, I look back at where we were a couple of weeks ago and the questions we were getting around just is the market overvalued? Are we in a bubble, right? And now we've seen a sell-off, right? The market kind of sold off about 5% from recent highs. And to me, that's a good sign in a bull market is getting these types of corrections is healthy. Like you want to see a market that is pricing in the risks accordingly. We don't want to see a straight line up. We don't want to see the
Mhm.
bubble continue, right? It's good to see the market is actually treating inflation and interest rate risk appropriately, and discounting that into in terms of markets and returns. So I take it as a good sign. Um, Along with the backdrop that there is other positive news, right? Like we saw the returns coming earlier this year driven by earnings. And to me, that as long as that continues, there is a better solid sort of fundamental reason for things to be positive going forward. But that's sort of my take in terms of what's been happening this year. I don't know if you've had anything else to add to that.
No, I think you're spot on saying that it's a good sign. I think I was reading a lot of commentary around just investors being complacent and not really factoring in geopolitical risk, bubble risk, and this is just a sign that the market still cares about fundamentals, which are inflation, interest rates. So it's good to see that there's some rationality to prices moving in the direction that they are.
Yeah, and I'd say it's been so we haven't been so far removed from volatility, right? We've seen the volatility in markets when the war started. We saw it last year during tariffs. We've seen the sell-off, especially with related to inflation and interest rates. We saw it back in 22, and we saw what happened there, right? Rates went from 0 to 5, and the market sold off about 20% over the course of a year. Now, I'd say we're nowhere close to that today, right? We're expecting a 25 basis point rate hike, right, from a level of like 3.5%, which is very
Mhm.
different from going from 0 to 5. But you are seeing similar signs in terms of the market selling off tech, right? Tech was a
Right.
big loser back in 2022, and that's sort of the first area that sold off when the prospects of inflation and that rate hike were on the table. You've seen tech sell off worse than everything else. So it does seem to be similar to
Yeah.
previous periods that we've seen.
Yeah. Always interesting. Well, with that as a background, I want to talk about the rocket ship in the room. SpaceX is expected to start trading tomorrow on June 12th. And it seems like everyone from Wall Street to Main Street is talking about this IPO. So I want to ask you, what is so special or different about this IPO? And maybe it helps to dive into just how IPOs work first.
Yeah, it is impossible to talk markets without talking about SpaceX right now. It is seems to be the only thing anyone cares about. And it's a good idea. I think we start with sort of how IPOs work because there's so many questions around all the differences about this specific IPO, the fact that it's so highly anticipated, that I think giving a good backdrop on sort of how IPOs work will help us sort of set the stage on what to expect for tomorrow. Typically, an IPO is when a company wants to go public on a stock market and raise a bunch of capital. And that's where SpaceX is right now. They need to raise a bunch of capital to fund their projects. And the way they do that is by hiring a bank to sell their stock to the bank's clients. Now, in this case, there's 23 banks involved. They all have clients that are going to be putting up that 75 billion that SpaceX wants to raise. And those shares are going to be delivered um, to those clients from SpaceX, and SpaceX gets the proceeds.
Mhm.
Then those clients are allowed to sell those shares on the open market, and that's what we see when a stock IPOs and you start seeing a price that's quoted in the market and it starts trading tomorrow. You'll see the IPO price is set today at 135, but it could be very different when it hits the market because that's the shares that me and you can purchase. We can go online tomorrow and start purchasing SpaceX shares after they're public, but those shares are actually coming from those clients that the bank used to fund those proceeds. So that's typically how an IPO works. I think the biggest things that are causing so much attention to this IPO are one, the sheer size of it.
Mhm.
75 billion is 3 times the amount of the last largest IPO on record. So this is massive in terms of scale. I think the size of the valuation at 1.75 trillion is the largest to date and puts SpaceX potentially in the top 10 and sort of the top seven of companies in the US on its first day, which is insane. We haven't seen that before. Some of the mechanics around this are different, where typically, um, index providers and ETFs that have rules around when to include stocks in their portfolios, a lot of those rules have been changed ahead of this IPO. And I think that has been causing a lot of concern around just are there investor protections in place? And is this a bad thing? Is this a good thing? So that's caused a lot of questions, I think. And another wrinkle to this is they're also, not selling as many shares as normally are sold in an IPO. So a typical IPO will sell up to a quarter of a company's shares. In this case, SpaceX is only selling 5% of its shares. And so that, creates a big sort of supply and demand imbalance, right? That we could see a potential pop because of that on the market tomorrow. And there's also, of that 5%, almost a third, 30% are being reserved for retail investors, which is also
Mhm.
a larger amount than typically is available for retail ownership. Usually these banks will just allocate to their institutional clients, and a lot of retail is sort of left out of the mix. This time they are reserving an allocation for retail. So that's another wrinkle that causes sort of a difference between, a traditional IPO and this one. So that's a lot, to digest in terms of why this is different and how these things work. Tell me, what are you seeing? What are you reading about SpaceX in terms of, why it's so special?
Well, I think the index providers changing some of their criteria to make sure SpaceX is included fairly shortly after it IPOs has been really interesting. I've also heard from clients, friends, varying opinions. Some people are very excited and want to purchase the shares tomorrow. So there's definitely that demand. But then I also have other people saying, I don't want to own these at all. Um, so, what happens to investors that do not want to own these shares if they get added to an index? Or how can someone avoid exposure to it? But is this even something that you would recommend?
Yeah, it's definitely something that I've heard as well. And I think there's a couple of reasons for it. I think whether it's financial reasons, like the company is not profitable today, that seems to be a very big sticky point in terms of just having a valuation at 1.75 trillion and
Mhm.
losing about $5 billion a year right now is something that people are scratching their heads at and saying, how is this possible? I mean, it seems to be a typical playbook in terms of how Elon's companies have been run and priced in the past, but it's also something that makes a lot of investors weary of the prospects for the future, right? The company has to be perfect going forward and execute on all of its number of businesses in a great way. They have profitable businesses underneath like Starlink, but they also have
Mhm.
XAI as part of this conglomerate that is losing money right now. And they just folded in earlier this year. So you know, that kind of raises some questions too. So there's a lot of reasons whether, you really just don't like Elon and what he stands for, or the financial reasons some people don't want access to this. And I think to me, it is a question of, knowing what you own today and knowing what the rules are. And so some of the rules for the index providers have changed, some have not. And so when you look at your ETFs that you own in your portfolio, you have to know what indexes they're tied to and what rules are changing and what is not. And so the big ones that are known right now are Vanguard, their CRSP index,
Mhm.
the FTSE Russell indices have both changed their requirements to fast track inclusion, meaning the indexes and the funds associated with those indexes will own SpaceX within weeks of the IPO. Some are going to be within 1 week, some are going to be within a handful of weeks. The S&P 500, which is the biggest one out there, has not changed its rules. And so the S&P's rules are that companies have to wait at least 12 months before being included, and they have to be profitable. So they have two main requirements that hold companies out. So the minimum time frame would be a year for any index fund that's tied to the S&P 500 to be included into that fund. So once you know sort of, okay, these are the funds I have, here are the rules, you can assess whether you're going to have ownership. But I think the other part of this that a lot of people a lot of people don't see is the fact that the ownership is going to be very small. And so, because of what I said, where they're only selling 5% of their shares, only 5% of the company shows up in an index portfolio. So, that 1.75 trillion valuation is not what is going to be put into these index funds. It's going to be 5% of that, or a little bit smaller, depending on the rules. It's a little bit of a mix, but even at 1.75 trillion, you let's say S&P said, yes, let's put this in our funds and it'll be at that 1.75 trillion valuation. You would still only own less than a 2% share in the company in your index fund. And because now there's only 5% of that included, it's closer to like less than, 0.5% or very, very, very small portion. And so I think your question on sort of what should someone do, like to me, I it comes down to like whether you want to buy it or you want to exclude it. I wouldn't go heavily in either direction. I would look at this and say, this I own a diversified index fund.
Mhm.
You want to let that diversified index fund do its job. I would
Right.
not want to make a decision on my entire position based on this very, very small sliver. The same way I wouldn't go and say, hey, take a bunch and put it into this stock, even if you're pro
Mhm.
SpaceX and you want to get a ton of allocation. I'd be like, tomorrow is going to be a very volatile day. You don't know what's going to happen. There's so many, data points around IPOs and owning things day one that don't point to great future returns. So I would say whichever direction you're leaning, um, it shouldn't, to me, you shouldn't be thinking heavily in one direction or the other.
Yeah, I think that's what a lot of the index providers were kind of arguing for the reason to make these changes is that their job is to track an index of public stocks and they want the indices to be representative of the market. And so it's not taking a position, it's just reflecting what's available out there and giving investors exposure to that.
Exactly, exactly. And it's also, if you're thinking for financial reasons, hey, this is a wildly unprofitable company, and I think it's going to tank. It's going to be a very small position. It could also go the other way. We
Mhm.
don't know how the performance is going to be because the dynamics are so different, because the supply of shares is so limited. It could mean the other way, and the stock does great, and then you could feel like, hey, I missed out.
Yeah.
And a lot of attention has been given over time that, public investors have been left out of investing in these tech companies that have been private for so long. Some of these rule changes, I think, also were not put in place just to benefit SpaceX.
Mhm.
There's a lot of other tech companies, AI focused companies that are expected to IPO, right? We've seen headlines around Anthropic, around OpenAI. There's others that have been, held private for longer.
Mhm.
But these rule changes will also make it accessible for those companies to enter these index fund portfolios. And so this is not just a SpaceX phenomenon. This is going to be something that gives, I'd say, all index investors an opportunity to get access to some of these companies and some of those companies you may want to own at the end of the day.
Right. Yeah, absolutely. Well, definitely a lot of great information there. It really helps put this IPO into context and understand the mechanics of how it's going to trade. It'll be a busy day tomorrow, I'm sure, but interesting to see.
It is. And one thing I've been looking at where, something you wrote about in the MMI this month around prediction markets. And I've been tracking where will the SpaceX IPO close at after it opens tomorrow, and it looks like it's somewhere between 2 and 2.2 trillion. So expecting
Okay.
about a 10 to 20% pop, not necessarily the 3 or 4x that some people are quoting, but if you're looking at prediction markets, that's what they're saying about the SpaceX IPO. So maybe we pivot and talk about prediction markets for a bit. I know you've spent a lot of time looking at these. This has been a vastly growing segment that people are paying attention to now, and what's the, I would say, primer on prediction markets for everyone, the 101 of what they are, and maybe what's the latest that, you're seeing in terms of where those markets are right now?
Yeah. Yes, prediction markets, such an interesting topic. And it feels like the news around prediction markets are changing every day. So let's just start with what they are. So prediction markets are platforms that allow its users to basically place a bet on a future event. And so the platforms offer what's called event contracts. And these contracts are priced based on the probability of that event occurring or not. And there's a wide range of contracts. You can participate in sports, the entertainment industry, like movies, music, celebrities, politics, the economy.
Give us an example. Like what would be an example of a contract you could use
So
and invest in?
I mean, you can bet on what's the 10-year treasury going to close by the end of this quarter, and there's various ranges that you can pick. You can also bet on who's going to be Taylor Swift's bridesmaid. So all sorts of things,
Is
right?
that one that you placed? Have you placed that bet?
It's one that I have looked at. It was her friend Abigail first, and now it's Selena Gomez. So who knows, right? But you can definitely monetize your opinion now, which is the allure of these prediction markets. And so, it sounds a little bit like gambling, but what's really interesting to me is the growth that the platforms have experienced in really such a short time because they've been around since 2020. So it hasn't been that long. And I'm sure you've heard of Polymarket and Kalshi because those are the biggest players in the industry. But there's other platforms that are also cashing in on the popularity, like Robinhood, for example. They added event contracts last year. So it's the landscape's changing really fast. And as you can imagine, with that comes a lot of questions around regulation. Critics argue that because the platforms are basically used as sports gambling, which is what makes up the majority of the volume in these platforms, they argue that states should regulate them. But proponents argue that these are not gambling. And so in that case, it's the federal government that should regulate them. And so I think as this continues to be a topic in Washington and pretty much everywhere globally, I expect to just see more interest in the platforms and continued growth in volume, in users. These platforms are actively targeting through marketing women so that usually this type of event contract slash gambling appeals more to young men, while now women are becoming a growing user. So I don't know.
Wow.
Have you heard
I've watched.
anything?
I've
Okay.
watched these. I've watched certain events and like peeked at like the contracts. So like I think I saw something around the election times when these were really popular for tracking sort of what a prediction market's saying versus what are polls saying. And they got a lot of, I'd say at that time, support for getting things right and being more accurate than the traditional polls. And so over time, I've seen the sports betting side of it where that piece has grown and sort of advertised a lot, which is it's kind of everywhere now. Um, and it does seem to be a place to gamble very easily,
Yeah.
right? Because it's sort of like like what you're saying. It's like an event. It's like a point in time and you're doing a coin flip. You're saying something's going to happen or it's not going to happen, and you want to put money on it. And it's just another, to me, like an extension of what we've seen since the pandemic when everyone sort of was locked at home and started day trading, and a whole new cohort of investors emerged overnight, right? And
Yeah.
everyone got into things like daily options trading and things that, were unheard of before, right? This to me is the next sort of logical step in that. And, it sounds like there is some regulatory framework being pushed, but it's not fully figured out yet. So,
Mhm.
as goes with most things, the regulations are a little bit behind the curve and have some room to, catch up. Is that a fair assessment?
Yeah, I mean, I don't think that anyone saw this growth just happen as fast as it did. Kalshi is regulated by, it's federally regulated now. So there is some, regulation around these contracts, but now it's becoming an issue where states that say this is gambling, um, the Supreme Court ruled that anything pertaining to gambling was left up to the states. So now the states want to ban them, but they technically can't because they fall under federal jurisdiction. So that's kind of like the back and forth happening right now. I think yesterday there was like another 267-page document on how to regulate certain markets, not all of them. And so who knows how long this is going to take to fully figure out. But In the
Yeah.
meantime, users are flocking to the apps.
Yeah, I worry about that because I see it and my lean is that this is net not good for society in a way where that gambling instinct kicks in and more people like I've seen over time how this is played out in sports in the sports world when it comes to sports betting apps where at first it was interesting and new because you couldn't do it unless you went to a casino. Now you can do it on your phone.
Yeah.
Then institutional money pours in. You have high frequency traders that pour in. You have a lot of algorithmic trading happening that takes advantage of everyone else in the market that is trying to just have a good time, right?
Hmm.
And I'm starting to see that play out a little bit in these prediction markets where now there's institutional money coming in, and most people who make wagers on these platforms are losing money. So from that perspective, you know, let's say there are people like me who think, hey, maybe this isn't the best thing in the world. Is there another side to this? Like, is there I have seen some things, but if you could refresh my memory, are there constructive use cases for these prediction markets?
Yeah, so there's absolutely the other side of the coin to this. And I would say the context matters in terms of defining if it's net positive or net negative to society. But in terms of just general things that prediction markets are good at, the first one is, of course, information. So, like, you can't read about prediction markets without running into this term wisdom of crowds, which basically just means that the collective individual opinions from a large diverse group produces a highly accurate answer. So prediction markets are kind of like a real-time probability index. And if you think about how we've traditionally used like public opinion polls to get this data and to get information, you know, these are conducted over the phone, through paper surveys in the mail. So these take time to collect. It takes the public's willingness to participate. So it takes a lot more time to have that information. And then once it's published, if the sentiment changed between now and then, that data is now obsolete. So that is what prediction markets are really good at, giving you a real time view into what the collective society is expecting about the future. What the information is used for, that's up to the user. Like, I don't really know what's the value in knowing who's going to win Love Island in the UK, but when it comes to election data or economic trends or financial indicators, that can certainly be valuable. And so, institutional investors know this. So event contracts have created a more seamless way to monetize institutional investors' view. And, in traditional finance, this is nothing new. The use of like options and derivatives and swaps like that, they were already doing that through these more complex financial instruments. But now this is just so easy. These platforms are also eager to have the trading volume from these institutional investors, so they're catering to them. And to your point, because they have these high frequency trading algorithms and this kind of just powerhouse of trading behind them, the individual retail trader or participant here is, more likely to lose money than to win money. So I did want to talk about hedging too, because I mentioned that in the article this month. And you could argue that prediction markets help you hedge some like real life risk. Like in the article I mentioned, if you're a home buyer that is trying to offset some of the increased costs on your mortgage from higher interest rates, you could potentially bet on these markets that rates are going to stay high. And so whatever money you make on that is going to offset the cost. I mean, that's like an insurance like position to take that you could potentially do without financial intermediaries. It's just you directly on the apps. Um, it still sounds a little speculative to me, but you could argue that that's a good benefit, like a benefit from these platforms.
Oh yeah, especially with where mortgage rates are today. I mean, come on. Like if you're buying a house, I'm sure if you wanted to lock in your rate or at least protect
Yeah.
your rate for the next 6 months, you could because there's, a lag when you're buying a house sometimes. That's super interesting. Yeah, I have seen there have been creative ways to use this in sort of real life applications, and I'm kind
Mhm.
of curious to see where it goes from here. Um, I think we're coming up on time, so I just want to, I think, end on one question here with all the hype around tomorrow's IPO, um, AI, prediction markets. What's the one thing you would leave investors with to focus on right now?
Yes, I love this question. Because our advice is traditionally, stay the course, be diversified, don't time the market, which is all true still today. But I think given the topics today, the one thing I would leave investors with is not everything is an investment opportunity. Like the financial industry can get very creative with products, and sometimes you see your friends doing things and they're making money off of things that frankly they don't even understand. So you have that emotional FOMO, and that can be a huge motivator to participate. I'm not saying don't use them at all. Like if you really get entertainment from playing this kind of gambling, forecasting the future, like by all means, but that's your fun money. It's not your investment strategy. It's not replacing your traditional investment allocation. It's not supplementing your income. Like that, prediction markets are none of those things. They're just a way to derive some entertainment from predicting the future and potentially make, you know, some money occasionally. But that's what I would say. Just you don't have to buy into everything that you see.
So don't chase the shiny objects, right?
Yes, exactly.
They're shiny for a reason. They want to get your attention,
Absolutely.
so you feel like you're missing out. And maybe focus on the things that actually matter, that actually compound over time. All the discipline, all the savings, all the investing,
Yeah.
as we typically recommend. Those are going to
Actual ownership of companies and growth and dividends and interest. That stuff does work.
agreed, agreed. Love it. Okay, great. I'm not seeing any questions from the group, so I think we can wrap on that.
Awesome. Well, thank you for this conversation. I had fun.
Totally. Thanks everyone for joining, and hopefully we'll see you next month. Take care.